We got some huge news for stock market investors this morning as the US economy added 147,000 jobs in June. That sent the Nasdaq stock index up over 1% as well as the S&P 500 index up close to 0.85%. So I'm going to discuss the details of those announcements this morning and what it could mean for stock market investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so the Bureau of Labor Statistics announced this morning that the U.S. economy added 147,000 jobs in June. The document I'm looking at is from bls.gov if you want to follow along. Now, the U.S. unemployment rate has been holding steady at between 4 and 4.3%, fluctuating in that range, and the U.S. economy has added a little over 100,000 jobs now for 6 consecutive months. That's great news for stock market investors as the US economy continue adding jobs. Now, you might say, why didn't the stock price go up by that much? Or how come sometimes when the US economy reports job gains, the stock market falls? Well, that has to do with the central bank and interest rates. Sometimes when the US economy is too hot or growing too quickly, that's actually bad news because that means that inflation could be increasing, and inflation is a big problem for economies. It threatens to derail economies worldwide. There's been disastrous situations that have happened to countries' economies when inflation gets out of control. So investors are always hypersensitive to what's going on with inflation. That's not the case right now with the US economy. With the current jobs report, there was some details inside that jobs report that signals inflation is not overheating and the US economy remains strong. And one of the reasons for that is because the central bank chairman, Jerome Powell, has signaled that he's unlikely to cut interest rates anytime soon because he's concerned about inflation as a result of the increase in tariffs. So the central bank was already hesitant to cut interest rates. So the US economy adding jobs is good news for stock market investors because that means there's people working, people having money to spend. And if people have money to spend, that means increase in earnings for all of the companies inside the US stock market. All right. So a lot of times the jobs report, the headline number might be saying one thing, but the details might indicate something else. And that was the case here today. The US job market, even though it added 147,000 jobs in June, these were of lower quality nature. And let me share with you what I mean by that. Government jobs increased by 73,000 in June, mostly in state and local governments, and mostly in education. 40,000 jobs were added in education, and that was a timing difference. Overall, the local and state governments are not adding that many jobs. Their budgets are constrained now coming out of the pandemic. When during the pandemic they had to spend a lot of money. Well, they didn't have to, but they did, as usually is the case with governments. They don't have to spend money, but they do because it's popular. And so now, with their budgets constrained, I don't think they're adding that many jobs. So this has a lot to do with the timing. And the federal government, it actually shed 7,000 jobs. And for federal government, jobs are down 69,000 following President Donald Trump's and Elon Musk's initiative to cut jobs and cut waste in the federal government. So those jobs are declining. Additionally, healthcare added 39,000 jobs in June, and social assistance added 19,000 jobs. So, together, these three categories contain the bulk of the job gains in June. And what do they all have in common? They're not business, they're not the increase in supply due to the increase in demand. That's generally where I like to see job growth. I like to see job growth in manufacturing. I like to see jobs growth in leisure and hospitality. I like to see job growth in business and financial services. That tends to indicate a healthy economy that's generating demand, and businesses are hiring because they need to serve customers and they need people to serve customers. That's not what we're seeing in the current jobs report, right? Governments don't hire people because they need to serve customers. Government hire people for a variety of reasons, not very much connected to demand or serving customers. Governments have their own agenda and their own initiatives that they follow that doesn't have to do with local conditions with business. Healthcare, of course, is almost unrelated to economic growth. People need healthcare whether they have a job or don't have a job. People have healthcare needs. So that's not an indication of a healthy economy. It's just an indication of an aging population that needs more healthcare. And of course, social assistance is the opposite of a robust economy. If the economy is robust and everybody is working, everybody is earning as much money as they need to take care of themselves, there will be less need for social assistance. And so it's a counter indicator of a healthy economy. So you see, the three major categories here of jobs growth are not indicating a healthy or strong economy. That being said, these job increases will help support an increase in economic growth because these folks that got hired recently in healthcare jobs and social assistant jobs and in government jobs, they now will be earning paychecks, and those paychecks will get spent. And those spendings from these individuals that recently got hired will go into the economy and generate growth and demand in other sectors. So hopefully you will start to see some job growth in other categories. One thing I was a little concerned with is manufacturing jobs are not growing. I would expect manufacturing jobs to increase given President Donald Trump increases in tariffs, which makes it more expensive to import goods from outside of the United States. So I would expect manufacturing jobs to increase in the United States, and we're not seeing that. We're not seeing that yet. Now, in the back half of the year, we might start to see that as the pause in those much higher tariffs might go into effect again on July 9th. So that's something I'm looking out for. What this job means for stock market investors is a positive sign. The likelihood of a recession is decreasing. With these jobs being added, as I mentioned, these folks will go out into the economy and spend the money they will be making and generate economic growth and demand in other sectors as they go out and eat at lunch and maybe buy a car so that they can get to work. Maybe they rent a new apartment, maybe they buy a new home, and all of that will generate growth in the US economy. So the chances and the likelihood of a recession are decreasing, and that's big news. And that's a big positive because those risks were extremely elevated following the tariffs that were placed on April 2nd. There was big concerns that would cause a recession in the US because our supply chains are so interconnected worldwide that hurting or causing a decrease in economic trade or causing a decrease in imports and exports usually impacts all countries, not just the one that's implementing the protectionist trade policy. So this employment report is yet another 1 month since these tariffs were increased that the U.S. economy continues growing and adding jobs. And that's good news. That's a big relief. And that's why you saw stock prices increase as a result. On the flip side, this makes it less likely that the central bank cuts interest rates because they are more focused on the risks of inflation as a result of the tariffs. And so, with jobs growing robustly and the unemployment rate still less than 4.5%, there's no reason for the central bank to cut interest rates just yet. They can wait for more data to trickle in. They can wait to see how businesses and consumers are reacting to the higher prices that are now flowing and trickling their way through the economy, and then make their decision after those results come out. So, overall, good news for stock market investors here. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.